Hello, everyone. Welcome in. I'm going to give a few minutes or a minute or two for everybody to get in here, and then we will get moving. All right, everyone. Welcome to your what are we, May 6th? May 6th Broker Playbook. And this is obviously 2026. And you guys are in for a treat for the training that we have today for the film study, film session, whatever you want to call it. And I have a special guest that many of you have not had a chance to meet that is going to be extremely important for your success as a private money broker. Now, before we go and get introduced to him, I want to kind of take us back to some old school things that I used to do in our film studies and our that many of you have been asking me to do. And so, without further ado, guys, I get to take you into the market update. Think of this as how you compare against your competition and what's going on the field. So, market reality, which is cautious and not frozen. So many of you guys know that one of the subscriptions that Mr. Lee Arnold and myself want you to subscribe to is a letter called the Kiplinger letter. This is a completely politically unbiased publication that will help every single one of you understand what's going on with no bias whatsoever in the country. I take that once a month and I bring it to you guys, and I'm going to do this more because I've got the request from you into what these things you need to know about from the last month as it pertains to you as a broker. So the market reality as a broker is you guys have to understand it's very cautious right now. It's moving, it's not frozen, but it's just cautious. Okay. Investor confidence is very shaky right now. And the main thing I want everyone to understand is that this is something that happens from time to time. But this is a very important distinction. Cautious means borrowers are watching the scorecard. They're paying attention to rates, payments, inflation, the news, election noise. They're trying to decide whether now is the right timing to make a move or not. But frozen would mean that nobody is playing the game. And that's not where we are at right now. Deals are still moving. Investors are still buying. Strong borrowers are looking for capital partners to bring them the money that they need to close their deals. But the market is playing tighter defense right now. So they're tightening things up to let less things get through. Now, what does that mean? Well, let's take you back a couple of years. A year or two ago, some investors could get away with sloppy numbers. Okay, they could get away with thin margins and even rough planning. But right now, that is really starting to get exposed for the investor that's not willing to do a little extra homework. Okay, right now the market is dictating that numbers need to be tighter. Borrowers need to be more prepared, and the exit strategy needs to be extremely clear. That means that our roles as brokers matter more now than ever because that's your expertise, getting things to be tight and clear, making sure that there's no loose ends, and being able to learn from somebody like myself and our guest that I'll introduce here soon about how to be able to do that. We're not here as brokers to hype borrowers up from the sidelines. And we are not here to panic because the game gets harder. We are here to help them read the field and understand the plays that are happening and make the smartest decisions based off the numbers that are being presented. This is the first takeaway from the market projection from the Kiplinger letter, is that it's a cautious market, but not a dead one. Okay, our second thing that I want you to understand here, okay, is that the rate environment is, you shouldn't be selling hope. You should be selling clarity. The report that I reviewed of the Kiplinger letter points to a continued inflation pressure, energy prices, energy price concerns, and the possibility that 10-year bonds may remain elevated for a while. That matters because private money and hard money do not operate in a separate stadium from the rest of the capital markets. When broader capital markets are under pressure, private lending pricing usually feels the same pressure too. So here's the broker lesson that I want from all of you guys, okay, that I want you guys to understand. Okay, I don't want you telling your borrowers that rates should be coming down soon just to keep them interested. Okay, that's not helping whatsoever. That is just plain guessing, and we're not here to play guessing games. Now, what is true is that rates will improve. We just don't know quite when right now. But does that mean that you can't broker loans? No, it actually means quite the opposite. It means that you become more important because you can build the deals around what can be done, not what could be done. A great way that I've been working on my own broker business recently is framing the deals in a way that make lenders want to work with them and want to accept them and do all that we possibly can with them. A great phrase that you can use with your borrowers is, we need to structure this deal. The capital is priced today, not where you want it to be. Because if the deal only works if the rates drop, if construction costs stay perfect, if the property sells immediately, okay, if the deal is priced in such a way that we only get, that it only works in a vacuum, it's not a good enough deal. You need to be able to have those good, strong markets about what is and what, instead of what might be or may be. Private money is not designed. So here's a quote from a previous Kiplinger letter. Private money is not designed to be the cheapest money in the market. It is designed to help investors move quickly, solve timing problems, and secure investment property, and execute when conventional financing does not fit. Right. As you understand this more, you're going to understand that you can ask better questions to create better files. That leads to better files getting cleaner answers from your lenders. Cleaner answers create more closings. So as you talk to your borrowers this week, remember this, okay, that brokers who win in this market will not be the ones who are selling hope. They are the ones that are reading the field, calling the right play, and selling clarity. Okay, a quote from that I heard Mr. Lee Arnold say recently. Okay, we cannot build a deal around hoping rates drop. The deal needs to be able to make sense on where the capital's priced. Now, finally, the risk and tight margins. The real risk right now is in margin compression. In sports terms, margin compression is like playing with less room on the field. When there's less room, there's space for mistakes. Okay, borrowing costs are higher. Rehab costs might be higher. Insurance costs are higher right now. Buyers may be more cautious. Appraisals may be more conservative. Projects may be taking longer than expected. So the investor does not just need the deal to look good on paper. They need a deal that can hit and stay in the game. This is where brokers need to ask better questions. Okay, one of the best questions that you can ask as a fix and flip borrower right now is, when was your rehab budget last verified by your contractor? Okay, that is a very simple question, but it tells you a lot. If the borrower says, I just estimated it myself, That's a red flag. And we all know that from past broker certifications. We never want to take a person's word for it, right? If they say, I used numbers from 6 months ago, that may also be a problem because of cost of materials, labor cost, timelines being moved, numbers that are not reliable anymore. And if the rehab budget is wrong, the whole deal goes wrong. The same thing applies to exit strategies. Okay, do they plan to sell, refinance, hold as a rental, move into a DSCR, pay off another source of capital? The exits cannot be vague. Okay, the borrower saying, I'll figure it out later is not a game plan. That's a Hail Mary, right? And Hail Marys are not lending strategies. As brokers, we need to help borrowers stress test their deals right now. So what happens if the deal takes 90 days longer than what they had originally expected, right? We need to be able to help them understand these things. If you've got a borrower that's asking, can you get me your lower rate? My advice to you is don't chase that question. Hold strong to what you've been given by COGO, some of your other lenders. Now, if they're holding to that, you can always do the standard of, if I can, will you? And then go and do some work. This month, I don't want you guys being rate quoters. I want you to become the coach. I want you to become the person that understands the full deal. And so people like myself and our guest speaker for the day can help you be able to position the right play on that field. Now, final point from the Kiplinger letter I want to bring up, okay, is it's more of a practical takeaway than anything else. And that's lead with math. Okay, don't chase borrowers with rate quotes. Okay, if a person's just asking for rate and terms, don't chase them. In other words, don't run onto the field without knowing what your play is. Ask better questions if a person's asking you about rates. Okay, ask what is your purchase price, your rehab budget, ARV, how much do you want cash to bring down to the table? You know, your standard vetting questions, right? Okay, because in this market, and you'll hear this more as we talk about COGO with our guest speaker, is the cleaner the file, the faster it moves, and the more the lenders want to work with you. So the better questions you ask, the cleaner the file will be. Okay, now you might want to ask what I'll call contingency questions, right? And one of the things is if you talk about rehab, the person says it's going to take $30,000 to rehab this property. A follow-up question I've been asking a lot recently because of market conditions is, okay, great, I'm going to take 30,000. What happens if the rehab amount comes in higher? What is your contingency plan for that? What happens if the resale value drops while you're doing this? What is your exit strategy there? What's your plan B? What happens if you're wanting this rate, but you can only get a higher one? What are you going to do then? Right? All of these different questions are meant to help you as brokers be able to navigate where we're going, because it's not an impossible thing to close deals. As a matter of fact, just myself, I closed 3 loans just last week. But I got those by working my clients through as a coach instead of a bystander on the way. Now, I want to make sure you guys understand how that loans are closing. So if I come into my next slide here, I want to detail some stories for you. And these are fun ones because this shows you guys that you are in fact doing these deals. They're not impossible, and it's extremely easy when you understand the process. I'll tell you guys right now, this is one of my favorite statistics. Brokers just in the month of April were responsible for deploying COGO Capital's money to the tune of $2,588,481. Just last week alone, we paid $20,000 in broker fees. $20,000 in broker fees alone just last week. That is an amazing statistic. It's one of the higher weeks that we've had in recent memory of being able to pay brokers for their deals. And to tell you how great of a job you guys are doing as brokers, look at this last line on your screen. This is year to date that brokers are responsible for over 80% of COGO Capital's loans closed. Last year, off the top of my head, we were close to brokers were about 72 to 73%. So you guys are doing your jobs well. And it's only going to get better when you guys hear what we have planned for you in the rest of this webinar here in a few minutes. I do want to give a shout out, though, to a few of our top brokers that we've had in the month of April. So we have our top broker for the month of April was Mr. Ernest Volaric. Ernest is out of Marietta, Georgia. He's one of my one-on-one coaching clients, and Ernest is rocking it right now. He did 3 loans in the month of April. And since he and I started working together, he's done a total of 7. Now, a little bit about Ernest's background. If he was sitting right next to me right here, he would tell you that anybody can do this. Why? Because Ernest is well into his 80s, and he, prior to getting involved with Lee Arnold and working with me as a mentor and going through our master broker program and everything else, he had no background with real estate. He had a chiropractor business for, I think, 30 years. And Ernest is consistently closing deals. And if Ernest can do this, he'll be the first one to tell you, you can do this too. So Ernest is number 1 in the month of April, 3 loans closed. Our next in April is Mr. Tracy Waggerson. Tracy closed 2 deals with us this month. And then this might be a name that all of you have probably seen come around before, is also one of my coaching clients. He also happens to be one of our coaches, Mr. Doug Baker. Yes, everyone, our coaches are doing this business right there with you. We're in the trenches. We're doing this business so that we can teach you the right strategies. All right, so we're in here, but I want to let you guys know, okay, we're not the only one. They're not the only ones that close deals, right? As of year to date, Doug has the most loans closed with COGO and 4, so he's averaging 1 a month. Ernest has his 3. And then we have another one of my coaching clients. His name is Oleg. Oleg is out of the Dallas, Texas area, Dallas-Fort Worth area. And I think for Oleg, I think it's the 10th or 12th loan that he's done with us inside of the last 7 or 8 months. These are just a few that he's done, that all of these brokers have done with us. But so far this year, we've had 53 unique brokers close at least 1 loan with COGO Capital. But we've had even more closed deals outside of COGO Capital because of their willingness to represent their borrowers and find the right deal for them. All right, this is just what we're seeing this year, but I'm going to let you guys know right now. I cleared this with Mr. Gary Myers earlier. If you've been with us for a few years, I run a Broker of the Year competition. And at the end of the year, the broker that has closed the most loans with COGO Capital will receive an invite where we will pay for your attendance at a master broker event. That is a $25,000 course just for being able to close the most loans with COGO Capital. Now, I know that this leaderboard will change. Maybe Ernest will be number 1 next month. Maybe you will be the number 1 next month because you've got 5 or 6 deals you're going to close with us. These are the things I want you guys thinking about. These deals can be done. And just to make sure that we are empowering every single one of you to do the best you possibly can be to close your first deal, is our guest speaker has initiated something that we call the 0 to 1 initiative. It is his goal, my goal, Gary Myers' goal, Lee Arnold's goal, to get every single one of you that have not closed a deal to get to your first one. And we're making it extremely easy for you to be able to do so, at least from our side. So I am going to stop sharing my screen right now, bring every one of you back, and I'm going to introduce you to a man that I've gotten to know pretty well over the last month and a half, 2 months at this point. Time has flown, hasn't it, Andrew? And so, Andrew, I do have a few questions for you. If you wouldn't mind asking them, I'm going to turn everything else over to you if that's okay.
Fantastic. Thanks, Brandon.
Awesome. All right.
Glad to be here, everybody.
So, first question I have for you, because I want to make sure everybody understands that you're just not this talking figurehead, that you actually come to us with some great professional background as well as personal backgrounds.
Yeah,
I've always found that people will they appreciate us more when they know where we've come from. So for you, first question I'd like to ask you is before you got into lending, where were you originally from? Where did you grow up? Where did you
yeah, sure.
what's that you?
Yeah, so I grew up in Washington State, and then I went to California for school. And after graduating, I got into flipping houses. This would have been 2012. I was flipping houses in 2012 in California. Also wholesaling some deals. Um, but yeah, that's kind of how what I was doing before. I really wasn't doing anything before. I think I wanted to get into technology. I kind of had a tech bent to me a little bit, initially, and then I found real estate on accident because I needed a job, and um, but it's been good.
That's awesome. So that brings in a later question. I know I preset these to you, but so that I can make sure you're prepared. But that does bring into like your preparation for this. So what did your professional path look like before stepping into your role with COGO Capital?
Sure. Yeah. After flipping houses, I learned about investment funds, and I was actually at a point where I was putting together deals, and it was a lot of work to find a deal, and then within a certain finite amount of time, go find the capital to fund that deal. And I didn't know about funds at the time, or private money funds or hard money funds. And this was 2012. It wasn't as popular as it is today. Um, so I was out, I was calling people up and said, "Hey, I've got this great deal. Do you want to be involved?" Also, it's 2012, which was, really the aftermath of the great financial crisis. So people were just getting comfortable, getting their feet wet with real estate risk again. So a lot of people were still risk off. They're saying, "No, I don't want real estate risk. That's way too risky," especially single family housing. Remember, houses were overbuilt. There was way too much supply. There was, not enough buyer demand to move houses. Houses would sit forever. So people are like, I don't know if I want to get involved. But I did find some people who would fund some deals. We flipped one deal in Northern California pretty successfully, and then we had another large deal in Hollywood we were trying to flip. I was looking for $1 million loan, which was insane to me as a young guy, but big deal. I was very excited, and then I met a company that was, essentially a private money lending fund, and ended up working for them because I went to them for a loan. They turned me down, but I saw what they were doing in terms of managing money and making loans, and I was very interested. So they hired me, and that's how I got into lending. I went from being an operator myself on the flipping side, and then kind of jumped feet first into a lending fund and got into investment fund management there in Los Angeles, and I was there um, until I moved to Dallas, and then now to Idaho.
And so one of the hardest real estate investment markets in the Los Angeles area to one of the most active in the Dallas area to up here to Coeur d'Alene. And so
Yes.
that tells a lot about your life transitions, but let's actually talk about your life outside work. Uh, what's your family like? And do you have any hobbies that you like to
Yeah, of
do?
course.
Uh,
Yeah,
t-
so we moved to Idaho to build a little farm on some acreage. We had bought some land out here, and we always wanted to build a farm. We have 6 kids, my wife and I, and it was a dream of ours to move out here. And Dallas was amazing. I love the DFW area. I could have stayed there a long time, but got a little bit hot. My daughter has a heart condition, and we're like an outdoors family. So being outside 365 days a year in Dallas is really hard if you have a heart condition and can't tolerate the heat. But here in Idaho, it's much cooler. And also, we're lower elevation than, say, on the eastern side of the Rockies, where, if you're in Colorado, you're 52, to 6,000 feet in elevation. Here, we're at 2,500 feet or so, and it's just perfect for us. So that's kind of how we ended up here as a family. And then also, Lee and I have just, very strong similarities in ideas about business and lending and faith. And so we have a strong alignment on our values and just the way we look at business. So when I met him and this opportunity came available, I just said, well, yeah, this is a no-brainer. Um, let's let's make this happen. And I actually had to. We're actually selling the farm right now down because we were in South Idaho, so we're selling the farm and we're gonna have to build another one up here. But that's fine. My wife's amazing. She's cool with it. So and the kids are all excited to be up here in the mountains and the trees and the lakes and stuff. It's a different climate up here than Southern Idaho, and it's I would say objectively more beautiful. So that part's not so bad.
Well, I will say, the longer you're up here, the more that you'll love it. I grew up in southern Idaho, and there's
Oh, did
nothing
you?
like,
I didn't realize that.
yeah,
That's cool.
there's nothing like the green here that you don't get down there, right?
Yeah.
It's amazing. Now, final question for you before we turn the rest of the time over to you for like all the COGO updates and everything.
Yeah.
This is something I've never asked anybody that's led COGO. What does your day-to-day look like as it pertains to making the changes for the brokers and really driving this 0 to 1 initiative?
Yeah, I love it. I wish I had an org chart in front of me I could show everybody. But really, all lending starts with your capital source. Your capital source is going to drive everything you're able to do. So because we have internal funds, I am one of the fund managers, and my job is to keep risk under control while still giving our funds access to what we think are some of the best investment opportunities in the market. Of course, the investments we make are debt investments. So when our brokers bring us a loan, we're funding that loan, and just like someone would buy a house to fix and flip, we're essentially buying a loan. We're making the decision to say, hey, do I want to put $200,000 in this piece of real estate with this person on this project under these parameters? Is that where I want to? Is that a buy I want to do? And so I make that buying decision every single day. I do that multiple times a day, approving loans and deciding where to place fund money. And then beyond that too, we just have pretty typical business organizational work to do, right? We have processors and underwriters, a servicing team, all the different people that report up to me. We are able to, I'm able to, manage them and kind of lead them. I've done this, you know, I've, I've lent well over $1 billion in the past. And in LA, I was at a, larger fund, and in Dallas, I was at a larger fund, and than what we're targeting today looks a little bit more like my past. So I've been down that road before. I know how we need to structure things from a process perspective, from a sales perspective, in terms of getting our brokers activated, and then also from a capital perspective. I know the capital partners we need to be working with to get the money in our funds and provide the cash to close all the loan requests we can get. So and an interesting thing on getting the cash, you know what it is? It's we actually need our brokers activated, bringing us some more deals because money follows deal flow, not deal flow following money, right? So the money comes and finds us as we get more deals. We get more people interested in you know investing in the funds. So does that answer the questions, Brandon? I'm sorry, I
I,
completely
I,
lost
I
track.
think
You
so.
did send me
But
some
I think that
questions
really goes
before this, and
into
I lost
what
them in my inbox.
yeah, we're good. I think that really answered a lot of everything, and it transitions well into. I love that you said that that activating the brokers, the money following the deals, right? And that's ultimately all the changes and the updates that you've been making is allowing more brokers to be able to bring deals to us, right?
Yeah.
So I'm going to turn everything over to you and let you fill everybody in on the uh, the great new updates that you've implemented
Sure.
and how it's going to affect the brokers.
Fantastic. Yeah, well, we can talk about lending guidelines. I mean, that's kind of stuffy stuff. It's not really exciting to talk about lending guidelines, but at the end of the day, what I want is all of our brokers to have a product that they can take to the market that they can with simple language explain to their potential clients, and they can tell people, hey, this is what we do and this is what we can't do. So I want people to have a very confident yes. And then when they say yes to a client, yes, we can do this, I want them to know that COGO's in their corner and we're going to fight tooth and nail to get that loan done if it fits within our box. That's why the guidelines are there. So get familiar with our guidelines. Today, what it looks like is we really have two products that I'm pushing pretty hard on. One is a 95% loan to cost product for our certified brokers, and then we also have a 100% loan to cost product for our master brokers. But the way we look at cost is this: it's purchase price plus renovation budget equals cost. So that's your cost, right? It's your hard cost, how much you're buying the property for, what you're putting into it. And for master brokers, we have a product available where they can fund 100% of that. So 100% of purchase, 100% of reno. And then for certified brokers, this is the program we want to be taken all across the US. We have 95% of cost. So if someone is buying a property for $100,000 and they're going to go put, geez, 95 is going to be hard. I got to get a calculator for this as I'm saying this out loud. So if you're buying something for $100,000 and you're putting 50,000 into it, that's 150,000 of cost. Our loan amount is going to be 142,500. So we're going to ask that borrower to bring in 7,500 to close the deal, right? To bridge the gap. On top of all of the costs, so purchase price cost, renovation costs, we also have closing costs and financing fees. Well, borrowers are responsible for that. Those are not hard costs associated with improving the property, but we do recognize those costs. And I guess this isn't the purpose of this call, but as I've gotten familiar with COGO, I know we have different ways of getting people different sorts of financing as they're able to reduce risk by being involved in deals and whatever. But the thing I'm really excited about today is really pushing 95% loan to cost lending across the U.S. in the markets we like, and then also the 100% loan to cost product. But I want to go back to something that Brandon said, and that's when we're talking to borrowers, and they're talking about rate. Here are our rates today are 12.99% interest and 2.99 points. So basically 13% and 3 points. But 12.9 sounds better and 2.9 sounds better. So that's why we're there. It's just a little easy to sell with a 2 handle there instead of a 3 handle. But I do think that it's really important, to Brandon's point, that we're not selling on rate, even though I do think for the risk that we're taking on as a lender, these are good rates, and it's realistic for the sort of leverage points we're at and the sort of areas we're lending in. But I do want to highlight that speed and certainty of execution matters more than rates. There was a time in 2020, I was working on a big commercial deal. Okay, I was in downtown San Francisco. I was personally brokering a $70 million condo construction loan to a lending platform I had done business with in the past. And the market was, 2020, 2021, people were uncertain about San Francisco. People were working from home, big tech hub, commercial values in that city were kind of on the way down, but they kind of plateaued a little bit. And I had a borrower who said, "Hey, Andrew, for this loan, I don't want anything higher than an 8.9% interest rate." I was able to get them very clean and simple execution at 10.5%. They said, "No, that 1% difference doesn't make, that 1% difference is too big. That'll be an extra, $1 million of cost across our project. And we really don't want to get the project done for that." Well, fast forward to today, that project sits unfunded. They've lost much more than that. And the project was never completed because they didn't go for execution. They didn't go for speed. They went for price. And that's the reality. Is I think we have to focus on getting deals in front of us done and walking our clients through that thinking. So for me, what that looks like is really getting on the level of a client but it's also recognizing not every money is a private money deal. Maybe someone can take the time and maybe they can go to a bank. Well, I would have no problem telling someone who's one of my clients as a past when I originated loans, I'd say, "Hey, go take that to the bank. I'll see you on the one that you need to close in 14 days and you need higher leverage on and you can't put enough, more cash in. Take that easy one to the bank, let them take 45 to 60 days to close it. That's fine. But if you change your mind and you need speed and you need certainty of execution, come to me and I'll help you with that." And I found just that sort of being helpful is a huge selling point, and just being a problem solver as opposed to being the lowest cost bidder. I have seen in chat here, this is interesting. I'm seeing some different questions and things. I would like to get to those. But one other thing I want to cover is just because Brandon mentioned it. I have the 0 to 1x. It's funny. I didn't plan this, but it's on my board back there. Because we have so many people on the cusp of success, and I want people to go from 0 to 1, and I want people to go from 1 to 100. And really being a broker is it's like starting a small business, right? And so you're saying, I want to find my first customer. I want to get my first paycheck. How do I get there? How do I bridge the gap? Well, that's really why I was hired to lead COGO Capital as the managing director, was to make sure that our brokers are equipped with the finance products and the education and everything they need, the steps they need to become successful. So partnering with Brandon, partnering with Robert, who's on education, partnering with Gary and Lee on the different initiatives we have. And then also understanding the capital market side, where we get our money from that we lend, to your clients. So from our investors, our family offices, high net worth individuals who are in our funds. But one of the things that I wanted to do with 0 to 1 is just walk you all through what would I do today if I had to start over again? Well, I would not go and wholesale properties. That's not me. That wasn't my thing. I did that a little bit. I did some wholesaling. I did some flipping. I had a really great deal once. I bought for 300,000, sold it for $500,000, and I lost 80 grand in the process. So even though I purchased it really well and sold it really well, I still lost a bunch of money. So I realized I'm not a flipper, but what I do love is I do love lending. And I learned at a young age how to find borrowers. And I found that there were lots of people out there who wanted money. And in fact, money is the easiest thing to sell, right? But what I do have to do is I have to be useful to them. So in a commoditized world, how can I make myself useful to my borrowers? Well, I found face-to-face relationships, getting on the phone, being responsive, and providing instant deal qualification for them was probably the best thing I could do. So someone would call me, and with a matter of really a couple minutes, I could tell them if I thought their deal would work for me or not. Or if I thought they should go a bank route and say, hey, go get cheaper money, or at least go try tomorrow. And if they say no to you tomorrow, come back to me and I'll do it. Because at the end of the day, I was looking at the relationship and I wanted repeat customers, and that really helped us grow. So I helped grow a lending platform from about $50 million to $1 billion in loans from 2016 to 2021. And that's how we did it. We focused on relationships. We focused on long-term value to our clients. We had a lot of repeat borrowers, and we did a lot of volume because of that. So that's stayed true to this day. Brandon, how am I on time?
We're good. Take as much
Okay,
as you need.
great. So if I had to go find my first loan today, if I had to, someone said, Andrew, hey, you now work for COGO, and like say I didn't know who COGO was, and I was going to do my first deal, but I know what I know today. I would say, okay, great. Can I please have a pamphlet that says exactly what loan product we have? Okay, we can do 95% loan to cost. That's great. Next step. Okay, I'm going to go find. I'm here in Coeur d'Alene. Here, I'm going to get on Facebook on my phone, and I'm going to look at real estate investor meetup near me. Oh, wow. Okay, there's the Idaho Real Estate Investor Network, and there's Real Estate Investing Network Idaho. This has 3,000 members. This one has 5,000. Okay, so there's some groups here. Oh, look, some people are promoting some free events near me. There's like an investor meetup down the street at that coffee shop over there next Saturday. Okay, that's where I'm going. I have my flyer. I'm going to go to that meetup, and I'm just going to talk to people and say, hey, I broker private money loans. I can lend 95% on your fix and flip project. Come talk to me about your deals. Usually these meetups have an introduction time where you can say what you do, like, hey, my name's Andrew. I'm a private money lender, or I'm a private money broker, and this is what I do. Please come talk to me afterward. Well, I can guarantee you people would come talk to me after that event because they'd be interested in money for their deals. I'm a live person standing in front of them. So that's what I would do. We teach a lot of wonderful technology enabled, one-to-many kind of marketing strategies. But if I had to close a loan next week, or if I needed to get a loan in my pipeline next week, I would go to the nearest real estate investor meetup with a pamphlet. And so, because that's what I would do, last week, Brandon, that we sent out that email? Last week, we sent out an email saying, hey, we want to make you successful. Here are the new products. Here's a pamphlet. Go take it to a real estate investor meetup. And I hope people take advantage of that. I'm earnest in saying that I am confident that people will find success doing that. Maybe you need to go to one meetup, maybe it's two, but I would be surprised if it's more than two. People are hungry for real lenders who can actually fund their deals. There are a lot of people who hold themselves out there as lenders, but they're not. They're just brokers. And you have the luxury of saying, hey, I am a broker and I do have a lender, and this is what they do. And some people will hear, for example, 95% or 100% loan to cost, and they won't believe it. They'll say, that's too good to be true. Say, no, it is. Here's COGO's website. Look at all the deals they've done. Okay, so now it looks like we need to get some pamphlets out to people, and I would like to answer some questions really fast related to guidelines. So I'm going to open this up. Let's see here. Brandon, can you help me sort through this? I'm seeing lots of
Yeah.
interesting. questions. Ground up construction loans. I did a lot of ground up construction in the past, but we do not do that today at COGO as an advertised product. Um, the the way we structure those is a little bit different. It actually does require a little bit more money up front because land is a very risky asset to lend in, and ground up starts out as land and then turns into a house. So technically, it's not 95% loan to cost. It would be a little lower if we were to consider that. I see people asking about pamphlets. Is this something that you could? Oh, be jolly.
Yeah, they can just email me and
Perfect.
I've got it. I can
Yeah,
send it
email
over.
Brandon. He'll get you the pamphlet. Fantastic. So also, experience of FICO still matter for lower rates. And let's just see the better the rate is. Yes. So I have been speaking to COGO Capital funded loans. Obviously, go to other lenders. They're going to have different programs. But one of my missions is to make sure that what we do at COGO Capital, the sort of lending product we make available to you, is the most competitive in the industry. And we're there right now with the 100% loan to cost, as well as the 95% loan to cost. An interesting thing to me is a lot of lenders are hesitant to lend to new flippers. And that's actually something we found success with is someone's a brand new flipper. We're willing to go that extra mile with them to get them prepared and equipped to do their first flip, to give them a loan, and to make sure we structure it within our guidelines in a way that protects us from a risk perspective, but then also really make sure they're doing a good loan. So a first flipper, the first deal they find probably isn't a good deal, but maybe it is. We'll take a look. We'll help them by underwriting and making sure there's good ARV there. That we're safe. So our ARV threshold on the new program is 70% LTV. And I just saw that as a question. So thank you who asked that. Thank you, Jacob. I got you. 70% ARV. Just looking through some questions here while we still have a second. People with poor credit scores. Yeah, so our credit is we're really targeting 600 FICO and above. The reality is everything I look at as an underwriter is through the lens of people, property, package, and that's how I'd recommend you underwrite your deals as well. Very easy to remember: people, property, package. And this is the same sort of framework that everyone uses on Wall Street. If you're Goldman Sachs, doesn't matter where you are, you're looking at people. That's the credit worthiness, the experience, the liquidity of that person. Property, looking at the location. You're looking at the actual property relative to the surrounding. Is this a 10,000 square foot home in a mobile home sort of neighborhood? Well, that seems risky, right? And then in terms of package, we're looking at the financial package. So what is our leverage? What is our interest rate? What are we being paid for this? Let's see. People, property,
One of
package.
the
Where was I
things I
going
think
with
would
this?
be really good to bring up,
Questions.
Andrew, is the difference between the 200% financing programs that you had introduced.
Okay, yeah. So we have 95%, we have 100%, and technically premium students. So people who've done programs like Lease Inner Circle or Master Broker, they have access to training and capital that is a little bit different. It's higher than the 95%. So the 100% loan to cost is a program that, I'll speak to that for a second because I just saw someone asking about Lease Inner Circle. If you're in Lease Inner Circle, you can still get access to 100% purchase price, 100% of renovation covered. And then also, if you're involved in the deal, we can cover 100% of closing costs. So that's kind of the package where you go through some extra training and you have that extra capital available to you. I'm not involved in that education, though I want to be more. And I very much stand in the corner of anybody, whether they're a certified broker, whether they're a master broker, whether they're in Lease Inner Circle. I care about everyone's success, and I'm happy to make sure they have, the most compelling capital product for their own deals or for their clients. We do lend on fix and rent projects. Yes, so we lend on anything that's single family, 1 to 4 unit. Those are all loans we can make within our funds, and I'd be happy to place money in projects like that as a lender. One thing we're not doing is when we look at rural areas, is we're saying let's try and be within 45 minutes of a major metro. So say you're 45. I actually just looked at a deal today that was 45 minutes outside of Fort Worth, Texas. It was in a smaller town, Bridgeport, Texas. Deal looked good. Area looked fine. And sure, it's a little remote, but it's not that far. You could still get into downtown Fort Worth. Maybe you're commuting there. Maybe you own a small business and you just need to be in town 2, 3, 4 days a week. It's not like you're doing that 7 days a week. We can make sense of that. But different markets are different, right? If someone says, Andrew, I'm 45 minutes outside of, oh man, what's a good small city? Oh, how about where we are, Coeur d'Alene, Idaho? If you're 45 minutes out of Coeur d'Alene, Idaho, you can feel pretty remote. And that's a loan that I would personally still make because I understand the market dynamics here, but depending on 45 minutes, which direction. But generally, you want to be 45 minutes from a metro with at least 200,000 people in the city center. So, we're talking about the major metros across the US, and being within 45 minutes of that. Um, okay, let's see. Hmm. Yeah, so someone asked about rural areas. Lee's Inner Circle. Will we get a copy of the requirements? Yeah, so we will make sure everybody gets a copy of the flyer that states explicitly what we are lending on and what this lending product is. Um, Brandon, as you send that out, if you can take a look, I know you and our marketing or our marketing team put this together. If there's anything you think that we need to add, we can make additions to it based on comments here. But I think we're running into time for me. Brandon, did you see any questions come across that you'd like me to address? I think I made through most of
No,
them.
you covered majority of them that I wanted everybody to know about, which is the new LTCs that we're doing, the different 100% financing programs, and what I really wanted everybody to hear is what I got to experience firsthand. Just a few weeks ago, after Andrew had gotten his feet wet and kind of stabilized on ground after he got his mind wrapped around everything that the uniqueness of what we do here. And I had a lead that came in, and to Andrew's point of being near a metro area, about 45 minutes out, I had a lead that came in that it was like 42 minutes by Google Maps from where the property was located to the outskirts of Dallas.
Oh yeah, I remember
And
this. Yeah.
and so for me, initially in my mind, I'm like, oh, that's just way too far out. But I went to Andrew knowing that he had the background with in the Dallas area, and he said, "Oh, I actually had a like my boss like lived in that same city, and he drove every single day. I know that we'll do it all day long." Right. This is one of the things that I really wanted to bring up is one of the things that we've historically brokers have said in the past is that it's been harder to bring deals to us because they think that we're trying to find ways not to fund the deal. What Andrew has changed as everybody is we try to find ways to fund it as long as the three P's are are good for us. And we generally want to take all of you from that 0 to 1 and the 1 to 100 because that's only going to make you money. It's only going to make us money. And if there's any questions along the way, both Andrew and I are open at all times to answer questions. Mainly more me because Andrew's busy making the all of the changes. But Andrew, I do want to thank you for taking your time. I know you've got another meeting you got to jump into here in just a couple minutes. So I'll let you jump off and I can wrap everything up with everybody else. But I hope everybody was able to get their questions answered. If not, well, I'm sure that you'll probably be jumping in with me on future webinars as well.
Awesome. Yeah, and I would love, I mean, if you compile a list of questions, Brandon, I mean, I'd be happy to look at that and knock those out as I have time. As you said, I'm really focused on capital and growth. So making sure that I'm activating our brokers and that we have the capital to fund your deals. That's where I sit. I essentially I go to Wall Street and back up your deals. Making sure that we're looking at everything the right way. All right. So just remember underwriting people, property, package, and thank you so much for the time. Find deals that have merit. Oh, and another thing, hey, say you have, people, property, package. If you have a weak person, but you have a strong financial package, meaning interest rate, points are there, leverage rate is good, and you have a good property, we can make up for a weak credit score. If someone has 500 credit, well, maybe they have a really great property and they only need 60% LTV or something. Well, let's take a look. We can always be flexible. And that's the oh, someone said thanks from Irving. That's awesome. I have in-laws in Irving. Okay. Well, anyways, I'll let you guys go.
Thank you so much, Andrew. I will be talking with you probably tomorrow because I'm pretty sure you and I will be heading out of the office right after this.
All right. Very good.
All right, everyone. Well, I personally I want to thank every single one of you for jumping in on this. I know there was a lot that we covered, so I'm going to kind of recap this in as quick and simple as I possibly can. So, number one, new changes on our standard loan programs. Okay, is still it's 99% of purchase. So this is if you're a standard borrower, right? 90% of purchase, 100% of the rehab, borrower has to pay closing costs. Interest rates and points are 12.99 and 2.99 for so interest rates are 12.99. The points are 2.99 starting out until the borrower has closed at least two deals with COGO Capital. At that point, if the deal is a strong enough deal, we will drop it down to 10.99 and 1.99 to be more competitive with that industry standard. Okay, now, this is where not selling the rates and the terms is more important. Selling what can be done and what should be done is better. I told you guys that I'd closed three deals with a specific just this last week. Well, the three deals were with one specific borrower. And the borrower initially came in, he told me, I'm not going to do anything unless you can get me an interest rate of 7.99%. Not doing it, you can't give me 7.99. Well, to Andrew's point, right? The three P's. I went to Andrew with this gentleman, and he had no experience, had a so-so credit score, but he had good cash reserves. Okay, so he's not the ideal, but he was good. From this point, we looked at the property. The property was 40 minutes outside of Dallas. So not exactly ideal, but the numbers on the deal were phenomenal. He's purchasing it for $100,000, putting $30,000 worth of rehab into it, and had comps that supported a $300,000 ARV. That right there, the package coupled with so-so was able to make it work. Right after we got that one, we started moving it. He found two other deals that were just like that, right? And the only way we had it was because I understood from Andrew's perspective those three Ps and showed that he was willing to jump outside of what the standard box would be and put it into something that's there. The point in all of this, guys, is I'm doing this business with you. I'm asking these questions. I'm willing to have the conversations. The sizers are what they're going to be. I will tell you guys, if the sizer puts out at 12.99, it's not going to work, right? If a sizer puts out at 12.99 and the person's asking for 8.99 and they're holding solid at it, you can't drop it down. It's just not possible. But if you provide enough value, the 12.99 doesn't mean anything. Butch, you asked if my client received the 7.99. No, he got the 12.99. But now he's going to be able to, because I was able to project the relationship and I was able to show him how easy it is and how much money that he could save by just going this way with the plan that I had for him. He was willing to do the 12.99. Right? Sometimes it's not if you focus on just what's in front of you, you miss out on everything else. I focused on the relationship and I got him tied into what I needed him to do, which was future deals, and which is only going to save him money and make him money. Now, Jim, your comments, so that's because you had access to Andrew directly. You guys have access to the loan officers who have access to Andrew. You guys have access to me who has access to Andrew. Here's one of the things is there's one of our coaches, and he might be on with us today. His name is Christian Wamsley. I had a conversation with Christian, who is a broker just like you, got his tuition reimbursed because he worked the business. Christian and I had the conversation I had this morning. He goes, I was like, how are things going with your coaching clients? And he goes, Brandon, I'm frustrated. It's like, well, Christian, why are you frustrated? And he said, because nobody is willing to step outside of their comfort zones and ask the questions that they need to ask and connect with the people they need to connect with. If you're thinking that I had that benefit, I still would have been asking those questions. I still would have been pushing, even if I wasn't here. Because the question you don't ask, the connection you don't try to make, the email that you don't think that you can send, is sometimes the thing that makes it one way or the other. Now, I'm going to tell you this. By me talking with Andrew, the only thing I got is, hey, yeah, I'll take this deal. Did I get a better interest rate? No. Did I get a more advantageous term? No. But I got the, I'll take it. And then it was on me to sell my borrower into why the value was truly there. You know how I did that? I didn't focus on the 12.99. I focused that it was annualized interest and they're only paying 1% interest. My borrower is a general contractor that has 3 teams of 6 people apiece that are going to be working on his deals. He can pound out a $30,000 rehab inside of a week and a half. He's going to sell the property inside of 3 to 5 weeks because I had advised him the second that we close on it, he's going to put it up for them on market to sell at a certain price. So he's going to be in and out of this property inside of probably a 2-month span. So he's paying 2% interest, not 12.99. Right? If you think outside the box and you understand the terms and you understand how things work, you can build value in anything. So I don't want you guys to think because that I can walk into Andrew's office doesn't mean that you can't do the same thing. You just have to leverage the connections that you have. And now, Cheryl, great question. How did I show the value? Well, the value was me making a human connection. During the course of our conversation, I found out that he has 2 daughters. As you guys all know, I have 3. I asked him why he was starting to invest now when he's got such a good contracting business. And he told me, well, I'm doing this because my daughters, I don't want them to have to work while they're in school. So a few of these properties I'm going to buy, fix up, and I might either sell them and put the money into a bank account for my girls, or I might turn them into rental properties and put them under my daughter's names so that I can uh, go ahead and allow the rents to pay for their livelihood. And I said, man, you're a man after my own heart. I'm doing the same exact thing for my daughters. And I'm glad that there's somebody out there that's like-minded, just like me. And I want to help because I'd hope that you'd help me do it with mine. All right. And from that point, we built a bond ads, built a bond over being something that is a worthwhile thing. Now, I know all of his daughters' names. And at this point, I know their birthdays. He knows my kids' names and their birthdays. He actually won my uh, last week. My youngest daughter got extremely sick, and I almost ended up in the hospital with her. And 2 times a day for the 4 days after she got really sick, he was reaching out, asking how she was and if there's something that she can do, right? I built the relationship. Relationships will supersede rate and terms all day long when you can just have the conversations. Now, having a good foundation, right, to work with the standard borrower. But when we get into the higher level programs, your Lee's Inner Circle, Master Broker, one-on-one mentorships, Success Accountability Group Level 2, you get into these things. That gives you into the 100% financing where you can do joint venture partnerships, where you can give the person access to COGO's money at 100% of the purchase, 100% of the rehab, and 100% of the closing costs. On the right deal, we'll go up to 75% of the after repair value on those. And for those that are master level clients that you're just like, that's just too risky. I don't want to do JVs. Andrew has done something that is completely unheard of in the real estate world. And I know this because I've been in this for long enough. For the master level clients and the one-on-one clients, okay, if you have a great deal that needs a little extra leverage, but you don't want to partner with the person, it's just a little too risky for you, but you know COGO can still do it. Our master level clients now, as of last week, are now able to offer 100% of the purchase and 100% of the rehab. All the client has to do is pay closing costs. And now that person can get 100% financing to a point. Now, there's one of our biggest competitors. Now, here's one of the great things is the person does not have to have experience. They just have to have the recommendation from you to COGO to get it. One of our biggest competitors, RCN Capital, just last week opened up a similar program of 100% purchase, 100% rehab. You just have to pay closing costs. However, in order for the person to get that, they have to have done 10 deals inside of the last year. COGO is not requiring that. Andrew is working his tail off to give every single one of you the ability to have no excuses. The only thing that's going to say out there is, are you willing to put in the work to find the person and be willing to build those relationships? And I want to make sure that every single one of you has that ability uh, to offer this and to be able to figure out how you can get to that point, or ability to make the connections where you can still offer that. And so if you want to be able to have a, a consultation, you want to be able to have a talk, I've spoken with Robert Tavares. I've talked with Mr. Charlie Palmer. You guys all know Charlie. And Charlie started the event off for you guys. I've talked with Gary about this. I've talked with Lee about this. I want to make sure that all of you guys have the understanding of how to do this. So if you want to be able to talk about how the 100% financing, you want to talk about the loan programs and how you can work with them. You want to have the consultation to be able to make sure that you are positioning yourself for success within this program and potentially being able to be that master level, that top level where you can do it all. Put your name in the chat here for me. All right, all I want to know is just your name. Uh, and well, actually, I can see your name. So put master or 100% in there, and that will let me know and Charlie know that we need to schedule appointments with you guys, with our team, to help you out. And so this is where I'm going to end it. Just going to shut my side of things off here for a second for all of you guys to put that in there. And then if you have any questions earlier in the chat, I'm going to give you a second to go find it. You got my email. And you can add, if I didn't cover any question whatsoever that you asked during this, send me an email. So with that being said, everyone, I will bid you all adieu, and I'll see you next month on the Broker webinar.